Welcome to EAGTAX and our tax advent calendar, where we will be sharing tax tips and explanations in the lead up to Christmas. For day 19, we will consider inheritance tax on death. The value of a person's estate on death, which is subject to IHT, is not just made up of the assets and debts held at the time. Initially, the executors must look back 7 years to determine whether the individual has given away any value which is not covered by any lifetime exemptions. This might include failed potentially exempt transfers, such as a cash gift, or chargeable lifetime transfers which are associated with trusts. The 7-year period is actually a fallacy, as we must also look back 7 years from the date of each gift in the 7 years to death. Therefore, you might have to consider a 14-year period to the date of death. These transfers are considered in chronological order, using up the available nil rate bands. Any IHT due is then usually payable by the recipient or trustees, dependent on the nature of the gift. Another consideration are gifts with reservation of benefits. This is where an individual gives away an asset whilst continuing to enjoy the benefit of it without commercial payment. The value of this asset may not have successfully left the person's estate, even if this took place more than 7 years before death. Once the executors have determined how much of the nil rate bands are still available, the IHT due on the net value of the estate held on death can be calculated. There are 2 IHT rates on death, the standard 40% charge and 36% where 10% or more of a person's net estate is left to charity. The IHT is due to HMRC 6 months from the end of the month of passing. Both the tax and IHT forms must be filed prior to any probate application and distribution of the estate. Form IHT 423 can be used where the deceased has sufficient funds to cover the IHT charge, with HMRC taking the funds direct from the nominated accounts. An instalment payment option is available in certain circumstances, and some banks will provide short-term loans to facilitate the granting of probate. Those who wish to protect against IHT liabilities can also obtain specialist insurance policies designed to cover gifts made during lifetime and also on death. Don't forget that a final tax return might be required covering the period from the 6th of April to the date of death. Executors may also be required to complete a return covering the administration period. We'll be covering a few more IHT topics in the coming days, but we hope you found this useful. Please take a look at our website for more information and contact details at eagtax.co.uk.